Are you running your entire LLC out of a single bank account? Well, you might be setting yourself up for a massive financial and legal headache without even realizing it. So many entrepreneurs, whether you just formed your LLC or you've been in business for years, make this one critical mistake. They mix their funds, which leads to confusing bookkeeping, surprise tax bills, and zero visibility on their actual profit. More importantly, failing to properly separate your finances can destroy the very liability protection your LLC is supposed to provide, putting your personal assets, your car, your house, your savings, all of it at risk if the business ever faces legal trouble. In this video, I'm breaking down the exact 5-account banking structure I use to scale my own business from its first dollar all the way to processing over 8 figures in revenue. This is practical in the trenches system that creates financial clarity and builds a rock solid foundation for your business, guys. We're going to cover the foundational account that acts as a central hub for every dollar your business earns and how to systematically handle taxes stress-free so you're never caught off guard. The secret to creating a financial moat around your business to protect it from any storm. And my personal favorite, the account that gives you permission to grow and innovate and reinvest, turning business development into a predictable system. Plus, a secret account to reduce the risk of getting audited and getting in tax trouble. My name is Colin Matthew. I read Rich Dad Poor Dad when I was 13, and I became obsessed with credit and finance and investing. And I even followed in Robert Kiyosaki's footsteps, and I even enlisted in the Marine Corps at 18, where I witnessed firsthand what Rich Dad's book said, that they don't teach financial education in school. You see, the Marine to my left and right were defaulting on cars and credit cards, so I got certified in credit repair to fix their credit. And fast forward now, I run an 8-figure credit repair and business funding company. And I make these videos to help you guys fix first, fund second, invest third, in that order. So to start, let's dive into the foundational account. This is the bedrock of your entire business's financial house. And getting this right is non-negotiable, guys. The revenue account. The first account is the most critical piece of the puzzle. It's your main operating account, the head honcho. It's where every single dollar your business earns must land first. Think of this account as the grand central station for your business's money. All revenue, whether it's from Stripe, a direct merchant processor, an invoice payment, a wire transfer, ACH, all revenue arrives here before it gets routed to its final destination. It's the single point of entry. Here's how to use it. All gross revenue flows directly into the single checking account. No exceptions. This gives you and your bank a clear top-line view of your business's cash flow. All regular, predictable business expenses are paid from here too. This includes software subscriptions, rent, utilities, inventory costs, you name it. Now here's a pro tip for building business credit and not getting any late payments. Set up all of your business credit cards as recurring operational expenses, right? Put them all on those cards and then set up auto pay to this direct checking account. Pay off the balance in full each and every month. This does 2 things. It simplifies your expense tracking down to a single monthly payment, and more importantly, it starts building a flawless payment history for your business credit profile. Remember, your credit profile is the most valuable financial asset that you have. Guys, keep it simple, silly. Simplicity is key, especially when you're under the $250,000 or even $500,000 mark. Keep it simple. Some people will tell you that you need a dozen different accounts for operations, marketing, etc. That's overcomplicating it. My recommendation, make this specific account the lender who's willing to give you the most amount of funding. For me personally, that's Chase Bank, as their cards go to $150K at 0% interest for 12 months, and I get awesome travel rewards points. And finally, their B-locks have no cap. They can lend up to 20% of your gross revenue going through this account. At this stage, the revenue account is your workhorse for both your income and your expenses and your business lending. Now that all of your money is flowing through into this one place, you have a clear picture of what's coming in. The very next step is to build a wall around your business to protect it from the unexpected. This is where your second account comes in, the savings account. This becomes your financial fortress, guys. The savings account is your emergency fund and your peace of mind fund. What happens if your biggest client pays 60 days late? What happens if a critical piece of equipment breaks? Without a cash reserve, your business is fragile. You'll be forced to make decisions out of fear and desperation, not from a position of strength. When you set this up properly, guys, you can negotiate from a position of strength. You can walk away from bad deals, you can weather a slow sales month, and think long-term because your short-term survival is already guaranteed. Here's how you use it. This is a dedicated business savings account. Its only purpose is to hold your emergency reserves. Money flows in, but it doesn't flow out unless it's truly an emergency. And here's how you fund it. After all of your monthly expenses are paid from your revenue account and you've allocated money for taxes, which we're going to cover next, a portion of this excess cash, your net profit, should be automatically transferred here. Your goal should be to target to build a reserve that covers a minimum of 3 months of essential operating expenses. If you're in an industry with a long sales cycle or volatile income, you might even want to aim for 6 months. Calculate your total monthly burn rate, all of your expenses, and make that your goal. And here's the thing, building that reserve doesn't have to take years. In fact, we show entrepreneurs how to access up to $250K in 0% interest capital and no-doc business term loans and lines of credit in as little as 7 days. And you can use that as your reserve or even invest a portion of it for passive income. In the description and the pinned comment below is a link so you could check it out and maybe even work with my team. All right, so your business is earning money and you built a safety net, but now you have a silent business partner you can't ignore, and it's called the IRS, aka Uncle Sam. And to avoid the single biggest financial shock that sinks many new businesses, you must absolutely do this next thing. Open up a third account, the tax account. This is the set it and forget it system that I use in my business. There's no worse feeling than for an entrepreneur than getting to the end of the quarter and seeing a huge profit and then realizing you have a 5 or 6 figure tax bill with no cash set aside to pay. It turns your success into a moment of terror. My CPA gave me a simple but powerful rule of thumb early on. Treat 20 to 30% of your gross revenue as if it's not even yours. By immediately segregating it, you're never able to use it and you're never looking at it as spendable cash. Now open a separate dedicated business savings account and label it as taxes. This account has one job, hold tax money. And here's how you fund it, right? Every week or even every 2 weeks, look at your total deposits into the revenue account for that period and calculate 20 to 30% of that amount and just set up an auto transfer or automatically transfer it immediately into your tax account. There's even some automated softwares that can help you do this as well. And here's a disclaimer, the 20 to 30% range is just a general guideline. You absolutely should talk to your CPA or tax professional. They will give you a more precise percentage based on your business entity, whether it's LLC, S Corp, or C Corp, your income level, your state, and your personal tax situation. And remember, this money is not to be touched for anything else. It's not an emergency fund. It's not a growth fund. It is sacred, guys. Now we get to the exciting part. Once your operations are covered, your fortress is built, and your taxes are handled so Uncle Sam's not knocking down your door, it's time to systematically invest in the future of you and your business. This next account is my personal favorite because it's where you get to give yourself a budget to get creative and fuel your biggest breakthroughs. This account is the reinvestment and experimentation account. This account prevents stagnation. It's your dedicated war chest to fund innovation, test new ideas, and make calculated bets that can even 10x your growth. Every month, I buy a new course, and every quarter, I buy a new mastermind group. It's like Jim Rohn says, it has been my personal experience that income does not far exceed personal development. And this is how you move from just running a business to actively building an empire. I call this my budget to fail. But it's really a budget to learn and earn. Early on, I would allocate about $2K per month into this account. It was just my sandbox. I could use it to test new Facebook campaigns, try out a new software, hire a new employee or contractor, or even develop a new product, or hire a coach to learn a specific skill like sales and marketing. And by framing it this way, you remove that emotion. It's an investment, guys. If it's an experiment and it doesn't work, you didn't lose money, right? You spent your learning budget for the month and you gain valuable data. What works, what doesn't. But when an experiment hits, dude, it takes off. You've just discovered a new scalable growth lever for your business. In fact, many years ago, I paid $6K to learn sales and marketing from a coach, and it's gone on to be one of the best investments I've made, getting me to 8 figures. This account is funded from your profits after you paid expenses. Set aside taxes and fund your emergency savings. It's growth capital, guys. These 4 accounts from the core financial engine of a well-run LLC. But there's one bonus account that will massively help you do bookkeeping and keep you out of trouble with the IRS. Account number 5 is the payroll account. The payroll account is where it's very critical to get right, or you risk getting audited and having a bad time. And here's what happens. As your business grows, as your team grows to include employees or even just, some high-paid contractors, you then start mixing your payroll with your daily expenses in the revenue account. This is a big no-no, guys, because bookkeeping starts to be a nightmare. It makes it difficult to get a clean, at-a-glance view of your expenses versus your profits. So let's say, for example, you have a business that does about $250K mark with payroll. This is usually where I advise people to consider creating a dedicated checking account that is linked only to your payroll software. Whether it's Gusto, that's what I use, ADP or QuickBooks or payroll. Nothing else is ever to be paid from this account. It's quite simple to set up, but there are some common mistakes to avoid. So here's what to do. First, open up a separate business checking account with a simple name like payroll. Then a day or two before you run your payroll, right? Before you run your payroll through your software will tell you the exact total amount needed for this period, including salaries, employee taxes, etc. You then initiate a single transfer for that account from your main revenue account into the payroll account. Now you have a clear trail for your accountant. It simplifies reconciliation and it makes financial statements much easier to read. And you now have 5 banks that have deposits all going through them to season and nurture. So you have 5 different partners to get business funding from. Here's a recap, guys. Having this structure will give you complete control and clarity over your LLC's finances. But setting up the accounts is just the first step. The next, and arguably the most important and challenging, is to build your business's credit profile so you can leverage these accounts to get access to funding, lines of credit, loans, and high-limit credit cards that don't put your personal credit at risk. If you don't have a clear strategy for building business credit, you're always going to be stuck funding your business out of your own pocket, guys. And remember, if you understand the game, you can even get banks to compete to give you money. So watch this next video where I break down step by step the process to start building business credit for your LLC, even if you're brand new.